Welcome to the What to Watch video update. This is the last video that I do over the weekend where I pull out the charts that seem to be telling us something right now, either positive or negative. And then I have a third area that I go through where we just keep an eye on different things that we want to watch because sometimes that can have an impact on the S&P 500. And this is being prepared for Monday, August 11th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. The first part will go through the positive aspects of what I'm seeing right now. Because we had an up week, this is on the positive side. This is an intraday chart, 10 minutes, candlesticks here. And we did see a lot of upward movement on Friday, which was kind of strange because we didn't have any economic reports. We seemed to slow down right when we came back to the high that was set on Thursday, where we set the high right at the open and then came down. Well, we got back up to that level. We were able to hold on to those gains and actually close above this R1 pivot point and ended up having a fairly positive week. We're also positive this way. Now, there's a negative thing that could potentially be developing here. When we look at the daily chart, we're seeing a series of higher highs and higher lows since we gapped lower a week ago Friday when the employment report came out. But some might interpret this as a bearish flag, where we can't seem to get above these previous highs. We haven't been able to do that yet. Now, if we break above this and continue to go up, that would negate this, but just something to be aware of. This could be taken as something negative. We did see Friday's advance. If you look at the bottom, that's just the volume for Friday's session. We were below average. I have a moving average that goes across here. That's another negative divergence that we're seeing. We go up. We didn't set a new all-time high. The NASDAQ and NASDAQ 100 did. We were close to an all-time closing high, but we didn't quite get there on Friday. All right, now, whether we're going up or down kind of determines if this is positive or negative. When I did this video a week ago, we were starting to come down, and that's the context is more negative after we had been extreme positive. Now we're starting to turn back up. We're positive again. That's why it's on the positive side, because the latest reading has us going up to about 59 here. So we tend to go with it until it gets to an extreme reading again. We're also positive because the VIX is still below 20. Now, a week ago, we were above 20, and that was, oh no, what are we going to do? Well, the VIX was able to work itself down. The line chart are the closing values. The bar chart is the open, high, low, close. And they both declined. They're both below their moving averages. And we're positive here. If you take the bigger picture look, going back to about the first part of July, we had that big down day. That's when value really outperformed growth, and this ratio took a big hit. But since that time, we've been seeing more of an upward move here when we look at the intraday growth to value ratio. We're still positive here with another intraday chart. The blue line is above the red line, and they're both going up, which is, they can do that. The red line can even get above the blue line, but the main context that we're looking for is what is the overall direction, and they are going up. Then we look at end of day charts. First, we look at the small caps. They're pretty much going sideways with their growth to value ratio, even though they're still in an uptrend. Coming down a little bit, mid caps underperformed in this past week. They're just kind of chopping along sideways right now. But the overall growth to value ratio is still in an uptrend. We also took a bit of a hit with the S&P growth to value ratio here, but we're still in an uptrend there as well. And when we look at this growth to value ratio, we're actually setting a new all-time high here. That's why I show a lot of different growth to value ratios to try to get a bigger consensus of what's actually happening. This one looks more positive. And we're looking positive when we compare the Qs to S&P. We're not looking so good, though, with the discretionary to S&P. We're back below the moving average, and the moving average is starting to turn down. But when you compare large cap growth to value, we are in an uptrend there. So that's positive. So we're above the moving average, with the moving average going up with the large caps, coming back down slightly below the moving average with the mid caps, and just kind of going along sideways below the moving average with the small caps. And we're still positive here, even though the discretionary to staples ratio took a bit of a hit. We're still above both moving averages, and we're still in an uptrend. And this is positive. This is value to tech, which is growth. And this going down just means that value is underperforming tech or growth. And we're improving here with the short-term trend based on 20 periods. The lines are starting to turn up. Now, if we can get above them, the lines keep going up, yeah, that would naturally be more positive. We just want to see if we start to come down, if these lines begin to roll over again, that's going to turn things more negative. And the intermediate term trend, even though we're below both the red line and the blue line, the lines are still, for the most part, going up. And that is still treated as positive. Then I'm keeping an eye on the 20-period simple and exponential moving averages. The moving averages that you saw before are double and triple exponential. They move really fast. These move a little bit slower. We're still above the 20-period moving average. That's why we're positive in the short term. As long as we stay above this, we'll be positive. If we come down, we'll be watching this to see if it provides some kind of support. Now, after Friday last week, we actually dropped below it, and we turned negative in the short term, but then we were able to get it back on Monday, and then we've been able to stay above it throughout this whole week. And here's a bunch of different moving averages, a 20, 50, 100, and 200, both simple and exponential versions. We're above all the moving averages, and the moving averages are still going up. That's positive. And when we look at those stocks in the S&P above their 50-day moving average, that's intermediate term, we're still above 50 and bouncing up. That's positive. And when we look at those stocks in the S&P above their 100-day moving average, that's more intermediate to a little bit long term. That's still above 50, and it did advance on Friday. And those stocks above their 200-day moving average, also above 50. So that's looking pretty good. It's the short term that's taking a bit of a hit. Now, this is positive for right now. These are anchored moving averages. They're attached to a significant high or low, and then they just extend forward, where other kinds of moving averages, you take the last number of periods, add them up, divide by the number of periods, and if it's a simple moving average, that's your result. If it's exponential, it's weighted more towards current price. When we really finally broke out of this range that we were in and really moved higher, that's pretty significant. That produced a gap right here. And so there's another anchored moving average attached to this. And so far, we're holding above that. So if we do start to decline, I'll be watching the 20-period moving averages, but we'll also be watching this to see if it provides some kind of support. Now, if we do fall below this, there are lots of these anchored moving averages that are still going up, they're still trending higher, that could provide some area of support. And we're looking good here. 10 period, that's short term, a simple moving average, that's the green line. Now it's flattening out a little bit, but we did close above it on Friday. We're still kind of going up here with the 20 period exponential and the 30 period exponential. So price is above all three lines, and even though they're kind of laboring right now, the lines are still trying to go up. That's positive. And this is more based on time. This is the Landry Light. This just suggests that maybe when we've been in a trend for 40 days or longer, it's overextended. Well, right now, we've been in this upward trend for 69 days. So we're positive. You can't really take that away, but it might be getting kind of long before some people are going to want to eventually come in and take some profits, and that's going to push prices down. And we're also positive here with the proper order. It's still continuing to build an uptrend signal here. Now, we're not too far away from the 20-period moving average. That's what the boom indicator measures. But we are getting far away again from the 50. That's the intermediate term. And we use this like an oscillator. When it gets extreme positive or negative, it's just barely giving us an extreme positive reading again. Then we look at the trend. First, I look at a short-term chart. We're still seeing a weakening trend because we're going down. The black line is the ADX. That's the main indicator for this chart. And then I put a moving average on here just to give it a little bit of context. And when we're going down, that suggests a weakening trend. If we drop below 20, that means we're not trending anymore. Well, we're not there yet. We're trying to turn up a little bit in the short term. Now we're still positive because the green line, even though it came down a bit on Friday, it's above the red line, which is continuing to decline. So it's a positive weakening trend in the short term. We're seeing pretty much that same thing in the intermediate term. Below the moving average, declining. The green line is above the red line. The green line did come down a bit. The red line also came down. That's still positive in the intermediate term. Then we look at a weekly version of the trend, and we're now not trending. You see the last few weeks here, we've been kind of going sideways. Even though we were up 2.43% for the week, we've dropped down. We're still positive though, because the green line is above the red line here, but we're not currently trending in the longer term. And sometimes that can happen before we see a reversal, or we could continue to go up and a new trend could develop. We just want to keep an eye on this one. And we're positive here. The Swindon Trading Oscillator, we're above zero and advancing based on price and volume. And we're positive with the parabolic SAR weekly chart. We're negative on the daily side, but we're positive here longer term on the weekly side. And the advanced decline line, it did turn up. Now, there's some positives and negatives you can take from this. It did go up. We're above advancing moving average, the moving averages, and in the bigger picture, we are positive because the moving averages are also going up. But we went up kind of nice here, and we're not really seeing a lot of follow through based on price or volume in Friday's session. So we just want to keep an eye on that. If we're really going up, we want to see that be confirmed by the advanced decline line based on price and volume also going up with a little more gusto than what it's showing here. But it's still positive. Now, accumulation distribution. I have three what I call smart money indicators. This tries to pick out what the smart money is doing because that's what we want to do. And this is smart money indicator number one, which is positive. It's just barely above the moving average. That's the bigger picture. It's also positive with a shorter term modified MACD down here that I call the boom indicator. But this also gives us an idea of the interaction between the indicator and the moving average. And this is going up, and this is more short term. That's the positive side. Now, what we did see is we were coming down here, and we actually turned negative. We were going up with accumulation distribution, where we were coming down with the boom indicator, which is, again, a MACD indicator. The settings have been switched, and maybe that's worked itself out now, but we just want to keep an eye on this. But for right now, after Friday's close, this is positive. We're positive with smart money indicator. This is number three. Number two is negative, and that's on the other section coming up here. But we're going up with the Chaikin oscillator. We're above the moving average, and we're crossing above the midpoint. We're also positive with another primary indicator called the vortex. The green line is above the red line. And then longer term, this is a weekly chart of the S&P. Now, this is positive, and we're still looking pretty good with the weekly bars here. What I want to point out, though, is we have an R1 pivot point still above current price, which is at about the 64.68 level. If we do really start to break to the upside, then we'll watch this. Because sometimes, if you go back, these are the previous pivot points. Sometimes these ended up being pretty significant. So if we do come up here and hit this, what's going to happen? Are we going to break through and keep going up? Are we going to hit that and stop and start coming down? Now we switch over to some other indexes. The Dow, which the only reason this is positive is because we're still in an uptrend, but it really didn't do all that much. It's still below this pivot point here. It opened above it and then closed down below it, but we haven't been able to close above this pivot point. And the Dow just hasn't been performing all that well lately. The NASDAQ, which is setting a new closing high here, this is looking better, and we are in an uptrend here. But you can see down at the bottom where we're below average with volume. That's a negative divergence. And then the NASDAQ 100 also setting a new all-time high above this pivot point. We are in an uptrend. And when we look at the small caps, there are two indexes that I look at. The S&P 600, that's negative still. This is the other one, the Russell 2000 small caps. This just generated a golden cross here. That's why it's positive. Now, we've been kind of chopping along and not really moving all that much, but we've stayed above these moving averages long enough to generate this golden cross. But in the short term, the MACD is still going down, and we're just a little bit below 50 with the RSI. Mid caps also just kind of doing a whole lot of nothing right now, but they're positive because they generated a golden cross here back in July. And so we're above the moving averages, but we're still below this pivot point. The Wilshire not setting a new all-time high, but still positive when taken in the bigger picture. Also, the same thing with the total U.S. stock ETF. In an uptrend, not at a high, but still looking fairly solid here. And the financial sector, and this has got a positive, and then the next chart will be a negative. This is doing okay. We see that we're in an uptrend, and we've been in an uptrend since late 2023 with the financial sector, and it came up out of the lows in April really nice. It's dealing with its 50-day moving average, but you just look at this chart and you're like, okay, yeah, we're pulling back a little bit here, but nothing to be too concerned about. Where we do get concerned is we look at a ratio between the financial sector, the previous chart, and the S&P 500, and you can see going back to the early part of May, we started to underperform. We came all the way down to the 200-day moving average with this ratio, bounced up off of that. Now we broke through it. Now we're seeing a death cross with this ratio. We want the financial sector to be strong. This is showing, okay, it's not strong on a ratio basis. It's underperforming right now. Is this giving us some kind of a warning that something is not right? Because if things were going really well, this ratio would continue to go up, not continue to go down. The FANG index, these are the really big stocks: Facebook, Apple, Amazon, Netflix, Google, Nvidia, and so forth. Setting a closing high here, but just still kind of range bound, but still in an overall uptrend overall. And then the semiconductors, a huge part of growth, setting a closing high here and in an uptrend. That's looking pretty solid. And we look at the SMH semiconductor ETF. This is not at an all-time high yet, but it is in an uptrend. And we're not back to this previous high here. This just measures the closing values of the previous chart, the SMH ETF. But this is still looking pretty solid. And then we do some ratios between stocks and bonds. The S&P 1500 to short-term bonds. And you're going to see a lot of this. And I purposely show a lot of these charts to see if we're getting the same thing across a number of different metrics that we use to measure things. This is still looking good, and we're above the rainbow, even though it's not at an all-time high. We're going up here with a broad market measure with 3 to 7 year bonds, also coming up out of the rainbow. The Qs, the 3 to 7 year bonds, this is setting a new all-time high here. So that's looking pretty solid. And then the tech sector, not quite back to an all-time high, but it is coming up out of the top end of the rainbow when we compare it to 3 to 7 year bonds. This is a weekly chart of the NASDAQ 100. We've been dealing with this longer term trend line going back to 2009. It's not really acting as resistance, as that's why I started showing this, thinking that we might hit this and then bounce back down. But there's been other times back in 2023 and into 2024 when we actually trailed above this trend line for a while. Maybe we'll do that for a little bit here. And then we look at a ratio of growth to value, the NASDAQ 100 versus the Dow, which is considered to be value, even though there are growth stocks in the Dow. This is breaking out and setting a new high with this ratio. And we look at the Qs, which again is the NASDAQ 100 to small caps. This is also breaking out with this ratio. That's positive for the market. Semiconductors are improving when compared to the Dow. We haven't quite got up to the blue line again yet, but we have been improving. And then we look at some other stock to bond ratios here. We're coming up out of the rainbow. And one way to look at this is when we're above the rainbow and going up, the market is anticipating a soft landing. That means no recession. Where when we were barreling down like crazy in March and into April, the market was afraid we were going to go into a hard landing, which would mean there would be a recession. Then this is that same chart, but reversed or inverted here. This is showing how bonds are underperforming stocks. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. Now we go over to the negative side, and we have a 10-day oscillator of the advanced decline line here, and this is still below zero and declining. And even with the update on Friday, this is continuing to decline. That's a negative divergence. And we look internally inside of the S&P. New highs minus the new lows. We're trending down with the 5-day moving average chart and the 10-day moving average chart. And we're seeing a drop off in the new highs. Now, it's no real secret. What really drove last week was Apple. It was up really strong and it's a mega cap stock. And so it's bringing the indexes up with it. Okay, that just means that there are fewer stocks that are participating in the upward move. Now, if that continues, that could be okay. But if those stocks start to see some profit taking or some news comes out that's more negative, then if we see those start to pull back, then they might take the indexes down with them. And we're not seeing across the board strength here when we look internally inside of the S&P. And this also, it should be going up. It's actually been coming down, the risk on to risk off ratio. Now, in the bigger picture, it's been coming up since the April lows, and that's provided some real positive movement for the S&P 500. But we ticked up a little bit on Friday, but for the most part, we've been coming down in the near term. But in the bigger picture, this is still positive. Then this is smart money indicator number 2. On the positive side, I had smart money indicator number 1 and 3. This is number 2, the Chaikin money flow. This is continuing to decline. The red line is still going down. And we're seeing a negative divergence here. We've been going up with the S&P, and we were seeing that before. As we were playing out in July, we were going up. The TTM squeeze started to go down. And now that we're going up over the past few trading sessions here, after we had that gap lower, the TTM squeeze is still continuing to go down and is actually negative. That's another negative divergence. And we're seeing a bit of a negative divergence here. Now, this is not an apples to apples comparison. This is like an apples to oranges comparison. This is the S&P 500, which has its own advanced decline line. And then just to compare it up with the broader market, we look at an NYSE advanced decline line. And where we've been going up here with the S&P, we've actually been going down on a closing basis with the NYSE advanced decline line. But it's still positive in the longer term. These moving averages, they're attached to the NYSE advanced decline line. And we're in an uptrend and we're still above the 50-day moving average. Then we look at the S&P McClellan oscillator. Even though we improved, we're still below zero. So that is negative but improving. And when that's below zero, we decline with the summation index based on price, and we're also continuing to decline based on volume. And we look at a broad market measure here, the NYSE McClellan oscillator. It also improved, but it's still below zero. And so we're going down with the summation index based on price and volume for the NYSE. And we are improving here with those stocks above their 20-period moving average. Remember the 50 and 100? They're doing okay. But in the shorter term is where we're seeing some weakness. We're still below 50, so it's negative, but it is showing some improvement. And then we look at the advanced decline line. All right, you're kind of just going down a little bit here with the NYSE common stock. A little bit of an upward move with the S&P, flatlining with the mid caps, and actually a little bit below the moving average with the small caps. And we're actually negative here, even though this is still giving us a very high reading. It's not extreme anymore. This is one of the momentum oscillators, and we're going down below the moving average, and that's negative by itself. Then we break it out based on price and volume, and both of these are also declining. And we're seeing some negative divergences here. As we were going up with the S&P, this was making a series of lower highs, and we're still trailing behind here when we look at the PMOs inside the S&P that are rising. Then we also look at the buy signals. We were going up here, we're going down with the buy signals. Then the PMOs that are above zero, we had been getting a nice steady flow of very high readings here. Now that's starting to trail off. These are some more of the negative divergences that we're seeing. And we're going down still with all of our momentum oscillators in the short term, intermediate term, and long term. Another momentum oscillator is the Copic curve, which continues to be negative. We're also continuing to go down with the bullish percent index for the S&P, and we tick back down. Now, this is still technically positive. I don't put a moving average on this one when we look at the NYSE bullish percent index. So the reason why this is, I like to keep those charts together when I can, but this is positive since it's above 50, but it did decline in Friday's session. Now, this is probably a bigger story here. We're setting a new all-time high with the NASDAQ 100. This is the S&P on top. But we see the bullish percent index for the NASDAQ 100 going down and actually below 50. And that is negative. All right, and then we look at the parabolic SAR chart daily version here. We're positive on the weekly side. We're still negative on the daily side. Now, we could be getting ready to see a switch here. The special K, which is a very long-term oscillator, we didn't get any signals in 2024. That's why I don't show this chart in the daily videos. I just mention it. But we could be getting ready to cross above the red line. That could be longer-term positive. But for right now, it's still below the red line, so it's counted as negative. And then the Zohorchak method. We were getting a full-on -10 here. That's a full sell signal. Well, we improved, but it's still negative. It's at a -6, so it's negative but improving. And the mass index, this is a weekly chart. Now, as I explained in other videos, the further we get away, because it was really near the end of June that this was triggered, the less relevant this becomes. And when we drop down below this red dashed line again, that was a signal for a reversal. Well, we were going up that generated this signal. So the reversal would be that we would be going down. We haven't really started to do that yet. But as each week goes by, this becomes less and less relevant. But it's still there. All right, and then we look at another way of seeing some negative divergences. We have the S&P 500, which is a weighted index. The bigger stocks count for more movement in the index. That's been going up. We look at an equal weight version. It did tick up on Friday, but we're starting to see them disconnect a little bit from each other. Then we look at another ratio between the weighted and equal weighted version of the S&P. This is now setting a new all-time high with this overall ratio. And the momentum for the NASDAQ 100, now this is the NASDAQ 100 here. Ever since the end of May, this has been going down as the NASDAQ 100 has been going up. Now, it's a negative divergence, but it's gone on for a while, and the NASDAQ 100 still continues to go up. We saw a bit of an improvement on Friday, but we're still below the moving average. And then we look at high beta versus low beta. This should be going up. Now, it ticked up a little bit on Friday, and the bigger picture is it has been going up, but we're seeing it starting to drop off as we're setting new highs with the NASDAQ and NASDAQ 100, and we're close to an all-time high with the S&P 500. This also is improving, but still going down. When we look at the semis to tech ratio, in a more positive environment, we want to see this ratio going up, and it had been going up. Now it's starting to underperform. And there was some pretty big news that hit the semis this week. NVIDIA was up a little bit, but it didn't have a lot of follow-through. We didn't see really explosive upward movement in the past week. Had to do with tariffs and trade deals and so forth. And then here's the negative small cap index, the S&P 600. We're not back to a golden cross yet. And we look at home construction, which is improving, but it's still negative. Until we get up out of the rainbow, this is still considered to be negative. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. Then some areas that we're just watching. We want to keep an eye on weekly jobless claims, which did tick up, but the moving average is still going down. What's a little bit more of a concern are the continuing claims. Now, we get real concerned if they go above 2 million. They're still under that right now, 1.97 million, but they're still staying kind of high. So if you look at this previous chart, it's like, okay, folks aren't getting laid off, at least immediately, but those folks that do get laid off, they're staying unemployed for longer. And we're watching this week after week still unfold this way. So we just want to watch this to see if there's any improvement. And then we did go below average with volume on Friday. That's a bit of a negative divergence to go up and have volume go down. But we just keep an eye. Now, it's not really surprising to see below average volume during the summer. I mean, obviously, people are on vacations. People are doing other things. So they get away from the market for a while. And we want to keep an eye on this. Now, the bigger picture is that the staples to tech ratio has been going down, and that's what we want. That's more positive. Lately, it's been bouncing back up just a little bit. So for right now, we're just watching that. We're also keeping an eye on the 4.5% level with the 10-year yield. We're still below that red line where I have that marked. And we want to keep an eye on the dollar. It was showing some strength, got all the way back up to 100. Now it's back down into the 98 range a little bit. Well, it's pretty much on its 50-day moving average. And then we look at the relationship between short-term and longer-term bonds, because sometimes this can tell us what's the market think about inflation and interest rates. Well, you look at this, cash to 3 to 7 year bonds. When this goes up, that means people are worried about inflation and interest rates. When this is going down and it's in a downtrend, they're not worried about that. And that's what we continue to see. Then we also look at Treasury inflation protected securities, which do adjust for inflation and interest rates. When the market's worried about inflation going up, tips outperform. Well, they're bouncing back up a little bit here, but they're really not showing any conviction now when we compare them to 3 to 7 year bonds. That same thing, tips to 7 to 10 year bonds, just kind of bouncing around in a range, not really showing much conviction. We look at the S&P to utilities ratio, which did bounce up on Friday, but it has been going down. Utilities have been pretty strong. Now, typically utilities have been a defensive area of the market. You get dividends. It's for widows and orphans. Well, you can make a case to say that utilities are a growth area because of the explosive need for electricity, for AI, for crypto mining, for electric vehicles. So you can kind of put it in that category, but typically what happens when this ratio is going up, that means the S&P is outperforming. Lately, it's been starting to underperform. That's a little bit of a thing to keep an eye on. And we're ticking back up a little bit here with the Staples to S&P ratio. We want this to go down. It's actually been going back up. And we want to keep an eye on this. This is longer term. This is a 10-day average of the highs and lows for the S&P. We've been going up with the S&P. This has been coming down. Now we're still positive since we're above 50, but the context here is that this has been declining. And we want to keep an eye on even longer term. This is a 50-period moving average of the new highs and new lows. It had been going up. It's still positive, but you can see it's starting to roll over just a little bit. And we're coming down here with a 5-period moving average of the highs and lows across the broad market. This had been above zero and going up. Now it's starting to come down. We want to keep an eye on oil. Apparently we mainly watch this for geopolitical reasons, but there's supposed to be a meeting between Trump and Putin. They're going to meet in Alaska. When I was recording the other videos, that the location hadn't been announced. I'm still not quite sure of the day and whether Zelensky's going to be involved in that or not. But that could have an impact on oil, either positive or negative, what comes out of that meeting. And we want to keep an eye on the spread between risky and not as risky bonds. It's not really a problem right now. When this is going up, that means fear is going down. And we keep an eye on the German DAX. That's the biggest stock market in the EU. It's still above its 50-day moving average. And the US markets were actually outperforming here. Go back when we finally bottomed and started to come up, the S&P was outperforming. It's slowed down a little bit and it's been chopping over the last few weeks. Then we keep an eye on different sectors. In the top area is a weighted version of discretionary to staples. Still going up for the most part, but not really showing an awful lot of strength right now. And this has more of an impact because Tesla and Amazon this is a weighted version of the sector, and they make up for more of the movement of that particular sector. Then to make it a little more fair, we look at an equal weight version of discretionary to staples, and that's actually underperforming lately. We look at tech, which is growth to utilities, which you could say is value. We've been coming back up, but we haven't come back to these previous highs and actually doing a little bit better. But we came down on Friday when we look at biotech to healthcare. And we're really seeing a bit of a pullback here when we compare hotels to utilities. And it's not so much that hotels are tanking, it's that utilities have been pretty strong, and that's causing this ratio to go down. And we look at what are called bellwether industries, kind of going sideways, but still holding up with the semiconductors. Home builders are improving. The transports are pulling back after they had been improving. Retail is holding up okay. It was coming down, and now it's starting to bounce back up. And regional banks, we're a little bit concerned about this. This is part of the financial sector. So we want to keep an eye on that. We've been seeing some weakness here. Is that a warning sign that we're seeing? And we look at another ratio between gold and the S&P. We're still below this declining trend line here, and that means the S&P is outperforming. We look at a ratio between U.S. and international stocks. For the most part, U.S. stocks have been improving, but they're not taking a major leadership role. Momentum stocks, which tend to do better when the market is a bit more under pressure, So this going back up is a little bit of a concern after they had been trailing off. In emerging markets, just kind of chopping a little bit higher, but seeing some shorter term weakness when we look at emerging markets to developed markets, which includes US and European markets. And then here are the pivot points. They've already been updated on the website. They've already been updated on the YouTube community tab. These are really useful to know if you follow things intraday. So thank you. I hope you found this helpful. There's some massive rain going on that I hope it's not getting picked up by the microphone. But I will talk to you in the next video.